From Tokyo, Japan and New Plymouth, New Zealand, this is Down to Business English with your hosts, Skip Montreux and Samantha Vega.
Samantha, listen to this headline from Fortune magazine.
What's that, Skip?
Goldman Sachs says we are on the verge of a stablecoin gold rush worth trillions.
A gold rush? When I hear the phrase gold rush, I picture people racing into the wilderness with pickaxes and gold pans, not bankers dressed in suits.
Well, there might not be any digging involved, but the excitement around stablecoins is real. They are suddenly the hottest topic in global finance.
Is that right?
Yeah. Major banks, governments, and even tech startups are scrambling to get involved with them.
You know, I've been hearing the term stablecoin a lot in the news lately. But to be honest, I don't really understand what they are. Are they just another kind of cryptocurrency, like Bitcoin?
Not quite.
No? What's the difference?
The major difference is stability. Unlike Bitcoin or Ethereum, stablecoins are designed to maintain their value by being backed by real-world assets, usually the US dollar or another major currency.
And that stability is why governments in Wall Street are suddenly so interested?
Apparently, yes.
So the headline isn't just hype. Something is actually happening?
Yes, something is definitely going on.
I'm not even sure what you can actually use a stablecoin for. Are they just something for banks and investors? Or can regular people like you and me use them?
Great questions. And that is exactly what I would like us to report on today.
Stablecoins?
Yes. Today on Down to Business English, we will look at stablecoins, what they are, why they're making headlines, and what all this could mean for business and maybe even our everyday lives.
Let's do it then.
Yes, let's get D2B, down to business, with the stablecoin gold rush. Why Wall Street is betting on digital dollars.
So explain this to me as simply as possible. What exactly is a stablecoin?
That is a very good place to start. A stablecoin is a type of cryptocurrency, but with one big caveat.
What's the caveat?
Unlike Bitcoin or Ethereum, which can wildly increase or decrease in value, stablecoins are designed to maintain a steady value.
And how do they do that?
By pegging their price to something stable, usually a fiat currency like the US dollar.
Thus the name stablecoin.
Precisely.
So if I purchase stablecoins, I don't have to worry about them suddenly losing value overnight?
That is the idea. Stablecoins are backed one-to-one by real money or something stable, like a U.S. government bond.
Okay. But how is that actually done? Are the companies who issue stablecoins just sitting on a pile of cash or government bonds?
Pretty much. Stablecoin companies like Circle, who issue the USDC stablecoin, or Tether, who issues USDT, claim they are holding enough US dollars and treasury bonds in reserve to cover each and every stablecoin they have in circulation.
That's what they say, but can we trust them?
Well, it's a fair question, and there has been controversy about whether some issuers really have all the reserves they are supposed to.
It all sounds a bit risky to me. And all this is happening on a blockchain, right?
That's right. Stablecoins use the same blockchain technology as other cryptocurrencies. So it is fast and borderless.
But blockchains have been around for a while. Why is everyone talking about stablecoins now?
One big reason is new financial regulations. In July, the U.S. government passed a financial law, the Genius Act.
The Genius Act? What does that stand for?
It stands for the Guiding and Establishing National Innovation for U.S. Stablecoins.
Oh, that's a mouthful.
Yes, it is. Genius is much simpler.
And what does this Genius Act do?
For the first time, it clearly lays out how stablecoins must be managed and what needs to back them.
So, no gray areas. The government is finally giving its stamp of approval on cryptocurrency?
Well, for stablecoins at least. But there is no doubt that this is an important milestone for cryptocurrency.
Sure. When regulators step in, Wall Street pays attention.
They certainly do. Citi is already using stablecoins in several countries. JPMorgan has its own stablecoin version. And Goldman Sachs is putting up serious resources into exploring the market.
Citi, JPMorgan, and Goldman Sachs. Those are some big bank names who are jumping on the bandwagon. Is this mainly happening just in the U.S.?
No, far from it. In fact, right here in Japan, a startup called JPYC just received a license from the Japanese government to issue the country's first ever yen-pegged stablecoin. And they are planning to launch this autumn.
So there will be a digital yen stablecoin on the market in the near future.
That's right. The JPYC stablecoin will be fully backed by domestic yen savings and Japanese government bonds. And it is designed to be fully convertible into yen.
And who exactly are buying these yen-backed stablecoins?
At first, the company expects demand from institutional investors and hedge funds. But long-term, the goal is to make it a kind of digital yen for global use.
So people in Japan could actually start using a yen-based stablecoin for business, or maybe even everyday payments.
Exactly. The company's business model is pretty interesting too. JPYC won't charge any transaction fees. Instead, they will earn income from the interest on the government bonds they hold as reserves.
This seems like a big deal, especially with Japan's reputation for being cautious about new financial technology.
It is. But Japan isn't alone in Asia. South Korea and even China are pushing ahead with their own stablecoin plans, as everyone tries to keep up with changes in the U.S. and global markets.
China, too? I thought the Chinese government was anti-crypto.
They have been in the past, but currently they are considering allowing yuan-backed stablecoins for the first time.
That is a major reversal from their previous ban on crypto trading.
It is. But I think they see cryptocurrency as a way to promote international use of the yuan. Hong Kong and Shanghai are now being set up as test beds for this push.
Just how big is the stablecoin market?
It's big and it's growing fast. According to analysts, the global stablecoin market already stands at around $250 billion. But some analysts think it could reach $2 trillion by 2028.
Wow.
Wow is right.
All right, but when you come right down to it, what are stablecoins actually used for?
At first, they were just a way to move money quickly between crypto exchanges. But now, companies are starting to use them for cross-border payments.
Like sending money overseas?
Exactly. If you've ever transferred money internationally, the paperwork and amount of time it takes to make a transaction can be frustrating.
Tell me about it. The last time I received a payment from overseas, I had to provide a whole bunch of paperwork. It took over a week for my money to arrive, and the bank fee was really high.
Well, a stablecoin remittance, on the other hand, can be sent almost instantly with little to no fees.
That's a huge selling point.
And in countries where the local currency is unstable, stablecoins can be used to protect your savings. You can keep your money in a stablecoin that is the same value as a US dollar, while your local currency swings up and down.
I can see the appeal. What about using stablecoins to pay for groceries or shopping?
In some places, that is already happening. Startups are experimenting with stablecoin payment systems, and the big banks we were mentioning earlier are all working on some kind of digital wallet so regular people can use stablecoins for all kinds of transactions.
So stablecoins are fast, cheap, and don't come with exchange rate headaches.
That's what is driving a lot of the interest in them.
But with all this growth, there have to be some risks.
Absolutely. One issue is transparency. Although government regulations are trying to make this more of a non-issue, there have been many cases where a stablecoin company didn't actually hold all the reserves they claimed.
Ah, so if everyone had wanted to cash their stablecoins out at the same time, there wouldn't have been enough money to cover them.
Which would have led to a digital version of a run on a bank.
Scary thought. What would happen in that scenario if a major stablecoin collapsed?
It would not be good. It could potentially shake the entire global financial market.
Well, hopefully the regulations that governments are putting in place will prevent that from happening.
The regulations are important, no doubt. Clearly, there is a lot of potential for stablecoins to become more widely accepted. But there are still a lot of open questions around them.
Well, like everything related to finance, there is always some risk involved.
No disagreement from me on that point.
And on that note, I think it's time we get D2V down to vocabulary.
The first word on today's D2V list is the noun cryptocurrency.
That's a good choice. It is a relatively new word.
That's true. The first time a major dictionary listed cryptocurrency as a word was back in 2009.
Only 16 years ago.
That's right. A cryptocurrency is a type of digital money that only exists online. It uses computer encryption to process and secure transactions.
It's a compound word, isn't it?
It is. It is a compound of the word crypto, meaning hidden or secret, from the Greek word kryptos, and currency, meaning money.
Cryptocurrency.
Both Samantha and I use the word cryptocurrency in today's report when talking about Bitcoin, Ethereum, and stablecoins in general.
So basically, cryptocurrency is the umbrella term, and stablecoins are one type under it.
Exactly. And you will hear the term cryptocurrency, or its abbreviated form, crypto, in business news all the time. For instance, Tesla invested billions of dollars into Bitcoin back in 2021. That was a big signal that major companies were starting to take cryptocurrencies seriously.
Moving on, the next word on our D2V list is the noun caveat. A caveat is a warning or condition you add to something.
Right. When you say that there is a caveat, you are pointing out an important detail the listener needs to keep in mind.
In today's report, Skip said that stablecoins were a type of cryptocurrency, but with one big caveat, that they're designed to hold a steady value. Without providing that caveat, I might have thought stablecoins behaved just like Bitcoin or Ethereum, when really the difference is stability.
Another example in a business context could be around a contract with a supplier. A company might agree to buy raw materials at a fixed price with the caveat that if shipping costs suddenly rise, the price will be adjusted.
That's a good one. Logistics contracts are often full of caveats.
So, whenever you hear caveat, think of a small but important warning or condition that changes the main statement.
What is our next word?
The final item on today's D2V list is the noun test bed. A test bed is an environment or a situation that is used to try out new ideas, new technologies, or new systems. In today's report, I said that Hong Kong and Shanghai are being set up as test beds for China's stablecoin plans.
So in other words, those cities are being used to try out stablecoins before expanding the idea across the whole country.
Precisely. Can you give us another example in a business setting?
Sure. A business example would be when a company tests a new product in one small market before launching it nationwide. For instance, fast food chains often use a single city as a test bed for a new menu item.
Right. If it works out in that test bed, the company feels more confident about rolling it out everywhere else.
A test bed is a good place to work out any problems or issues before introducing a new product to all of the customers.
Would you like to help Down to Business English reach more people wanting to improve their business English skills? Follow Down to Business English on Apple Podcasts, YouTube Music, Spotify, or any place podcasts are found. Leave a rating and a review and tell everyone how much you enjoy the show.
And that brings us to the end of today's report on stablecoins. We hope you enjoyed today's show and found it informative.
Stablecoins are definitely one of the most interesting financial developments we've seen in a long time. From Wall Street banks to a digital yen, it seems like everyone is jumping on the stablecoin bandwagon.
Well, we will definitely be hearing more and more about them. D2B members and Apple Podcast subscribers, the bonus Down to Vocabulary episode for today's report will be dropping sometime in the next few days. In that bonus D2V, we will be looking at 5 more useful words and expressions from today's episode.
Those words are to peg, circulation, to lay out, a gray area, and the stamp of approval. All very practical business terms and expressions.
If you are a D2B member, make sure you have copied and pasted your member-only RSS feed URL from the account page on the D2B website into your podcast app. That way, you will not miss out on that bonus episode.
And if you are an Apple Podcast subscriber, you don't need to do anything. The bonus vocabulary episode will appear automatically in your feed.
Thanks for listening, everyone. See you next time.
Take care.
Down to Business English. Business news to improve your business English.